can't beat them, then you pop them. You can't man them, then you mop them. You can't stand them, then you drop them. You pop them, cause we pop them like over red and vodka. C3, okay, a millionaire. I'm a young money millionaire.
Welcome back to 21 Rates Live. We are back from Thanksgiving. Hopefully everyone had a good time for our first ever midweek markets. So if you guys have been following the Bitcoin economy, this is something new we're going to be doing every Wednesday, which is kind of expanding a little bit outside of Bitcoin. This time we have some breaking news as of last week. So I know there's a million things going on every day. So Lee Borsai, breaking news of $100 million New Hampshire Bitcoin bonds. So very excited to have you on the show. You come from Wave Digital, but welcome to the first ever midweek markets.
You know, I was just debating, should I correct him? Did he say
yes,
my name right?
I went with Lee. Les, I apologize. Here we go.
You know what?
We're live.
We even put it on the screen for you.
Hey, thanks for having me. I appreciate it.
This episode of the Bitcoin Economy is brought to you in part by Ledin.
Need cash but don't want to sell your Bitcoin? Ledin is the global leader in Bitcoin-backed loans, issuing over 9 billion loans since 2018. And they were the first to offer proof of reserves.
With Ledin, you get custody loans, no credit checks, no monthly payments, and more. Visit ledn.io for more information.
So for those that were sleeping and had too much turkey and didn't see this news, can you just go over a little bit about what this means? Because we see $100 million. That's a headline right there. But the bigger headline is the first ever Bitcoin municipal bond. And I think maybe even start off with what is a municipal bond for the listeners that may not have an idea.
Well, I mean, I think we probably should even go to context of why I decided to do this. But a municipal bond, for the most part, is a municipality, and that can be, you know, anything from a university to a government entity, a state in this case, can issue debt. And you know, usually the way it works is the state, it's backed by the, the credit rating of the state. And there's lots and lots of different kinds of bonds, but there's lots of different kind of municipal bonds as well. And, we can even see the federal government issuing, bonds, and that's pretty much the right example, I think. It's just low cost debt that's issued by a state or entity.
Mm-hmm. And how did this come to be? You mentioned you live in LA, you have a music background, you told me you know a lot about bankruptcies as well before the show. And so how did Les get involved with this? And ultimately, New Hampshire is kind of known as that state, don't tread on me. It's very independent for the most part. So beautiful that they were the first state, but would love to hear if this is going to be the first of many.
It's a painfully long story. I think the answer is because I was in the music business, I look at things a little bit different, and there's always these parables. And I think a lot of people look at finance and don't see it as something that can be creative. And that's not the way my brain works. I look at finance and I look at financial instruments, and I think we have to go back to the context of, leaving the music business and getting into crypto. The simple answer is I was curious, and I continue to be curious. And every experience I've had, I'm able to draw on to create other experiences. But at the end of the day, if you look at the foundation of everything I've ever done, it's really the same. And it might be, taking a look at one industry and trying to figure out how to disrupt or, re-innovate in that industry. And it was kind of like in the early days of my music career, I was one of the first guys to ever do iPhone apps. So it was a really interesting exercise to take these technologists in Silicon Valley and pair them with these content creators in Los Angeles, because all these guys in Los Angeles thought they were technologists, and all these guys in Silicon Valley thought they were A&R guys or creative guys, and it just was creating communication between the two parties, and that's how I look at this. This is taking crypto and traditional finance and trying to find a common language, but obviously it goes a lot deeper than that, and I could ramble on here, but I'd say curiosity was the main driver.
from curiosity into how you apply that.
Yeah.
Municipal bonds seem like there's a lot of red tape, a lot of complexity, a lot of like political relationships you need to have.
Yeah.
You see so many fast moving treasury companies that are just IPOing, making a lot of money right away. As soon as the equity unlocks, they're selling. Why'd you go the hard route? Like what was kind of the push into, hey, we're going to do something that's probably long term, but also maybe better for, consumer overall.
I laugh because I tend to gravitate towards the things that are harder. They also create a natural moat to, not have a lot of competition around you. So we got to go back, and I have to give you the foundation that rolls into prime trust. So, and I'll blast through it. In 2013, I invested in the Ethereum pre-sale in 2014. In 2018, I formed one of the first registered investment advisors with my partner, Dave. And it might have been the first one. And when we started the company, it was really just seed stage investment. But we created financial products early. We were, as we followed the regulatory process the best we could. First with California, then with the SEC, because we wanted to adhere to guidelines. So we created financial products, but we also were one of the earliest companies doing treasury management for protocols. 2020, we're managing billions of dollars. The market falls apart, and all these bankruptcies start to happen. And really, the catalyst there was Voyager. I wanted to go buy Voyager, have our company buy Voyager, and we lost FTX. I thought, this is batshit crazy. Why did that happen? And with the bankruptcy trust and lawyers and everything said, look at their balance sheet. And I'm like, okay. So then FTX blows up, and I take another run at it, and I lose to Binance US. And at that point, I just go, fuck this. This is, this is a pain. And got the idea that we should just go buy the alternative assets off of the Voyager balance sheet. And we did that. And it became really successful. And that's how we started to go down this rabbit hole of bankruptcies and went to Prime Trust and Celsius and FTX and all back around. So while everyone was panicking, we were by ourselves really looking at alternative tokens in particular. There's a lot of competition for the bigger tokens like Bitcoin, ETH, and XRP and things like that. But the alts, no one knew what to do with them. So from there, I really focused on the government. So it's 2023, and the US Marshal comes out with an RFP, actually an RFI first. For those who don't know, request for information, request for proposal. And it was for class 2 to 4 alternative tokens. Coinbase was kind of down the rabbit hole for class 1, which was all the big tokens. But, my motto was, give me your shit tokens. We'll know what to do with them, because there was nuance. You could call a protocol. They may want to buy them back. You guys want me to keep going, because it really does.
Yeah. Do you buy these at a discount then, or what was
yeah.
Okay.
Yeah. So it's called a risk bid, and we'd go buy the bulk of them at a discount, and then we would know, look, are there airdrops here, or how do we liquidate these? We would obviously do an analysis before we bought those tokens, and it became a really great business. So that led me into a lot of the government thinking, and really, constructed 4 ideas. Let's do education, because a lot of these, states, for instance, didn't have a good grasp of what was happening with crypto. And so I hired the former deputy chief of the IRS criminal investigation unit, who had been involved in a lot of seizures. And we created modules and curriculum. I think we just did a contract to have accreditation for law enforcement for crypto. So we have many states we work with. And then we did a software deal with Luca and deployed that to some federal agencies to help them look at how much crypto is seized. So forfeitures became something I really focused on, and seizures and criminal seizures. And what that broke down to was all of the states were holding assets. And if you looked at unclaimed property or civil seizures that are coming, or accepting crypto, 7 states accept crypto for taxes, or forfeited criminal assets, then you start to have these pool of assets that appreciate state by state. And by this point, I'd met with 23 attorney generals. I'd met with 15 states, kind of everyone from controllers to treasurers. So again, I was going to these conferences like NAST and National Association of State Treasurers. No one was there. I was the only crypto guy there, like looking at these pools of assets. So then the administration changes. I'd known Bo Hines, who's great, before he got there. And I just looked at everyone kind of descend on DC without an agenda, but they wanted to be in the photo op. And I'm like, and I just really leaned into the states at that point. And the executive order comes out and two things struck me. And this was that curious aha moment. The first thing that struck me was the president said he would like to see pensions and retirement plans take exposure in cryptocurrency. And I said, okay, that's interesting. And the thing about it is you needed a rating to do that. And, I thought, okay, well, what's the real definition of a digital reserve? It can be a vault. It can be, you can have, a stockpile, but that wasn't that interesting to me. What was interesting is a digital reserve that had the ability to take the underlying assets and then borrow against them.
Yep.
So what the intention was to really create a structure, more than just doing one transaction with New Hampshire. So as you can imagine, I've already spent time with a lot of these states. And then I started going to pension conferences and I started to put all the pieces together and I put together some really strong partnerships. So in the upcoming weeks, you're going to see the accumulation of a year's work that I was very quiet about. And we're going to continue to see, announcements, because my goal wasn't to do a transaction. I wanted to be the guy that opened up debt for crypto. I wanted to do it with, every type of bond. And that's how I kind of got here.
It's interesting you bring up, strategy has been in the news quite a bit, these treasury companies as well.
Yeah.
And today, I didn't see Bitcoin today actually, but I saw yesterday it popped back up. Seeing some of these treasury companies, go down 80, 90%. Was that fearful for you as right as this news is breaking? A lot of this has happened kind of a little bit before, but
I tend to look at that kind of thing as opportunity.
Yeah.
And, for us, if we have a new vehicle and they're holding a lot of crypto, because, the structure we created, it wasn't about Bitcoin, even though Bitcoin really has to be the first thing, because there is a component of education with the partnerships that you create. Yep. New Hampshire was great because New Hampshire wanted to open up for business. They want to do this. And really, if you look at the first states that I'm doing this with, there were states that had legislation. So the way I envisioned it, having gone through RFP, and I'm in a protest with the US Marshal, my third one right now, over the way they've handled the RFP. And I just thought, I don't want to go through these anymore. And the other thing was there was a lot of competition at the state level to, other companies wanting to be the asset manager for those states. And I couldn't really compete with the sizable companies. So I thought, well, if we create a financial instrument, maybe we can bypass that RFP, process a little bit, and I can start working with the states. And that's really, the nature of New Hampshire first. New Hampshire is the first state to pass legislation. They can buy an asset over 500 billion, 5% of their budget. They haven't done it yet. But when they do, they're not going to just want to hold it. You can use these financial instruments as credit enhancements. You can do a whole bunch of really interesting things. And that was the other thing. Everyone looks at like bonds as this boring thing. Well, I looked at it and I said, wow, those tobacco settlement bonds 20 years ago were kind of interesting. You could just put these, and by the way, subprime, for as shitty as it turned out, in the beginning, a lot of those products were interesting. So when we look at bonds, especially rated down the road, I think it's really exciting to think about all the derivatives, because right now, on the equity side, we see ETFs, we see, not just equity side, we see pretty vanilla products here. And the thing about debt is, the derivatives and debt's $140 trillion market. That was exciting to me because it was putting, like you said at the beginning of all this, it's putting all those hard pieces together.
Yeah. What are you looking at when you're going in and you're making the case for this is why Bitcoin over traditional muni bonds? Like, what is something that resonates with them about using crypto, using Bitcoin as the underlying collateral versus traditional collateral that you see in hundreds of years has been used for bonds?
Well, because I don't think it's an either or. And, to be honest, when I started this, everyone, including my business partner, said, it's always the same with me. You're fucking crazy. What are you doing? And my answer has to be pretty thick skin and just ignore everyone, because no one thinks you can do it, any of it. And, so it wasn't an either or. It was, how do we, create a financial instrument that's different? And, to me, the brass ring is a AAA investment grade tax exempt bond that's collateralized by Bitcoin. And, to your point about the DATs, for instance, look, the DATs are in a not great place. And imagine if we took the Bitcoin that they're holding, and they're holding a lot, and we issued bonds and they bought operating companies so they could create robust businesses. It could change the dynamic of what's happening with the DATs right now, because the treasury model is clearly not in a great place at the moment. So for me, it really became a financial instrument that created, dual solution. One was, I'm creating a financial instrument, and because of the ABS structure that we went about, we can change the underlying, and that's our DNA. You can do really awesome, double barrel bonds that have, traditional assets in them, to your point. So it's additive. And then when we get to secondary, tokenization, then it gets really interesting, because the secondary markets could be massive, bigger than the spot markets. And that's what's really, the opportunity. And it allows people to kind of look at the structure and create on top of it. And I think that was always my goal. How do I open up debt for crypto? Let me be that first guy. And that's what the significance of New Hampshire was.
Mm-hmm. So, like, normally, from my understanding, like, bonds are backed by like taxes, projects or fees.
Sure.
In this New Hampshire deal, like, who's actually like doing the borrowing, the lending?
So the way that's going to work, there's some things we can't talk about. We have an underwriter that's one of the big banks.
Okay.
I have a partner, Rosemar, who has been in the bond business forever, and it was important to get someone that really, didn't know much about crypto, because the people we were dealing with didn't know much about crypto. New Hampshire did, but a lot of the other elements, that we had to put into place, I wanted someone that spoke that language. And so the demand for a product like this outweighs the supply in an incredible way. So selling it is not an issue, because $100 million in this market is nothing. In municipals alone, you had 600 billion of new issues last year. I mean, it's an astronomically large market. So on the other side of it, we have a miner that put up the collateral for this deal. And the reason we did that, and this isn't a pure muni. I mean, it is a muni because it's done through the BFA, the Business Finance Authority, and they issue for the state as well. But this is more than a conduit issuance. And, the way I approached it was, well, we're not just going to do a conduit issuance. We're going to do it with the government. And, you saw the governor come out with a quote. And again, it's because New Hampshire, sees the opportunity, the way they saw it for trusts or other types of financial, businesses. So I kind of cobbled it together because I wanted to create a use case. And then when people looked at the use case, they could say, oh, that might be a good thing we could adopt. And the federal government, for instance, has about $40 billion in Bitcoin. And again, everyone talking about a digital reserve is talking about a reserve that just holds assets. And, look, these assets are going to go up in value, and that's great. But I just thought it was really fun to create a bond for the purposes that pensions and retirement funds could take exposure without taking direct exposure and have upside in Bitcoin. That was really the goal.
Yeah. So now we're talking about, you mentioned that the strategic reserve, we've seen this from, states like Texas. And then, we've been teased a little bit on the government, are they going to take what was it? What was the big bankruptcy that I can't remember right now, that they built the initial reserve from?
Well, it was Mount Gox and
Yeah.
Silk Road. were the earliest seizures that IRS Criminal Investigation Unit did. And those were big numbers early on.
Yeah. And then I know there's red tape on just like taking those, directly and then having that, become a reserve. You're looking for like long-term claims and holding those aside. You're a government. You're not necessarily like moving things into your own balance sheet. What's your take on it? Just like generally, like what was the feasibility?
Yeah.
This episode of Bitcoin Economy is brought to you by Crypto.com.
Crypto.com has millions of users, has been around since 2016, and they just released proof of reserves on their verification page, driving the industry standard for transparency within centralized exchanges.
Link in the show notes below. Download the Crypto.com app and get started today.
I know a fair amount about this part. And what I love about criminal seizures is once those assets are forfeited, they're the property of the government or the state or who's ever forfeited them. So, you don't have this big legislative process. That's another thing I looked at, because like everyone's like, like the crypto summit was happening. Everyone's about legislation and policy, and I appreciate it. But Jesus, it just, is it really like, and I'm saying that after like working on this bond for a year, but, I just didn't want to get involved in that because I just saw these clear paths. And, here's another great example. When you do seizures in the traditional world, criminal seizures, the pre-court kind of pre-forfeiture, assets that are held, if it's fiat, the government can put those in T-bills and generate a return. Well, guess what? There's a lot of crypto that's pre-forfeiture that we could be staking. So there are all of these elements of the current process that are not being exploited, might be the wrong word, but exploited, where we could be generating a lot of money for the states and federal government. And I think, that's a pretty exciting thing. So the disconnect, I think, with what's happening right now is the US Marshals Service has kind of been in charge and tasked with the people who are going to handle these assets. Coinbase, I don't know how many assets Coinbase holds, but what, 237? I don't remember what the number is.
Seems pretty specific. I'll look it up.
Watch, let's see if I got it right. I probably got it wrong because they're always adding, but there's many more assets that are being held, and someone has to go in and say, look, this is what these assets are. This is how we rebalance them. These are the ones that don't have value. Someone has to track, the market and, get out of those assets so they don't lose value. And it's a pretty complicated thing when you're dealing with commerce and treasury and everyone, that has a say in what happens with these assets. And simultaneously, you have things like the FHFA pushing crypto-backed mortgages. And so there's a lot of noise right now. And I think if you don't get to the foundation of providing education to a lot of these folks, look, I mean, each one of these departments has really great people. Patrick Witt, who replaced, Bo Hines, is incredible. And you got Tyler Williams at Treasury, and, you see, Mike Selig going over to be CFTC chair, who knows a fair amount about crypto because he was the crypto counsel, at the SEC. So you have really good people, but the people underneath them still need an education because they're going to be making a lot of these decisions and they don't have a lot of crypto knowledge.
Fed chair, any predictions or thoughts of what's going on? I know Kevin Hassett's been kind of named as one of the favorites, at least on Polymarket. Came from Coinbase, that would be pretty bullish, I think.
I like Kevin. So Kevin kind of is, he did a lot with Milken Organization. So I've been fortunate to he's really, really sharp. So I'd like to see Kevin, which would be great.
What would that mean? Like hypothetical, I know you don't know, number one, and two, if you did know, you probably can't share, right?
I don't.
What would that mean?
Yeah. Okay. And I'll be honest, like there's this Devo song, going to my music roots, and I think it's called Freedom of Choice, about this dog with two bones and he just stays focused and dies. That's how I feel about my bonds right now. It's like the only world I live in is, how do I open this market up? Because it's, when I think about it and the other bonds I want to issue, construction bonds, like you said. So when I started my business with my partner said the greatest thing, and he doesn't say it anymore, but we're not really inventing anything. We're looking at everything, these complicated financial instruments have been around forever, and just replacing the underlying.
Yeah.
And if we follow that path, we should find success. And, I think my biggest thing is, how do I do something that no one else is looking at? I always end up, I guess maybe it's because I just don't like people very much and I want to isolate, or it's fun to be in environments where they want to learn. And, the fixed income kind of debt, conferences and people I've met the greatest people kind of at the highest levels, because no one's approached them. I was on a call yesterday with one of the big banks, and I mean, my first line was, I love municipals because the people are so gritty, or even high yield bonds. The high yield bonds, those guys are insane. Because there's just so much risk connected to it. I think I gravitate towards that because when I started my career, like this is crazy, but I was like 18 years old and I brought over rave DJs from the UK, to do warehouse parties. And, that risk always was, wow, are people going to turn up or are they not going to turn up? Because if they don't, you're losing your money. And so I became a concert promoter, and it was always that. And I just think, like a lot of the high risk stuff is really interesting. I mean, I wouldn't gamble like that now, but I think it really is in my DNA when I'm looking at what these products are and how do we reinvent them. And there's always like another good idea. And I swear to God, I said, once I do this bond and it scales a little bit, I'm done. I'm good. And I swear I've had 7 ideas since then. And it just like shutting this thing off is a pain in the ass.
Go ahead.
I was talking about pretty often, like a Jeff Bezos quote he did during an interview, which is like, I could sit down for an hour and crank out 40 good ideas, but it would kill the 2 great ideas because I didn't spend, 60 hours a week working on the great ideas to actually make those happen. It's interesting you say just your evolution of like, I'm going to look at municipal debt as the way of the future, but it's a big market. It's a big TAM. You said 140 trillion.
Yeah. Well, not just municipals. I mean, just debt in general,
Yeah.
Yeah.
What would you say to the younger audience that's like looking to find, that niche or the next big area to work in? And maybe it is, with Bitcoin, instead of looking at the flashier consumer exchanges or apps, like how would they even get started, maybe looking in the direction that you are?
It's a complicated question to answer. And I don't want it to be, because for me, I was always looking for what the next trend was or the next token. And, I was always pretty aware of how culture connected to, crypto. And that wasn't different than the music business either. When you saw Nirvana in a 200-person club, you thought, man, maybe they're going to be something. And, you can kind of apply that same, thought process to this younger generation looking at interesting things that are happening. One of the biggest gut punches for me was, I did that ETH pre-sale and I bought ETH for 50 cents. But the problem with buying something at that price is you sell it at a certain point. And, I think that actually pained me for a while. But then I thought, oh, wait a minute, maybe the next big thing is this combination of traditional finance and crypto finance. And it doesn't have to be discovering the next token, because there'll be other opportunities that are even bigger. And that's really how I look at this. Yeah. And, to a younger generation, I mean, they're already tapping into this. I mean, DeFi is obviously something that's incredibly important. Stables are going to be integrated into traditional finance in ways that we can't even conceive right now, just because of how great they are. And they're the lifeblood of, DeFi and, so many other things. If you look at how stables are applied, and I mean, even just the fact that, they're backed by treasuries, and there's ways to, I mean, again, I would say, take a look at the traditional markets and those products, and how do you take these innovative crypto products and then create? And it's just like, for instance, an asset-backed bond eventually that has a yield-bearing token. Well, that's different. That hasn't happened. And that was the point about creating this foundational one first. If we just created a simple Bitcoin bond that provided upside, we could get really, really creative, and then we could go into all the derivatives. And I think, the funny thing about the younger guys that are, or girls that are looking at crypto is they're incredibly savvy when it comes to finance. They just naturally understand it, in a way that, my dad, who's still alive at 93, doesn't.
Right.
And when I thought about municipals, I mean, it really was akin to, I was on a flight once with this, I don't know, a guy was about 80, and he used to be in the taxi business. He had medallions. And he said that, when Bloomberg came in, his business blew up and he lost all this money. And he was afraid of Bitcoin, because his traditional business blew up. And, I walked him through it when I was on this flight. And at the end of it, he understood it. And I think that's what these products will do. A lot of older folks grew up with municipal bonds, and, they understand what those are. So I think it's about just creating a bigger market and explaining what these things are. I mean, because at the end of the day, digital assets are digital assets.
I think that's a great point. I always hear my father echoing in my head, Bitcoin's beanie babies, and he said that when I first bought it, it was 2,400, and he told me they're beanie babies. So I'll text him and remind him every time it goes up, and every time it comes a little bit, he's like, "See, I told you." And I'm like, "Dad, it's at over 100 grand right now." So in terms of the different states you mentioned, you kind of teased it out, and I don't know if you can share what other states, but 3 years from now, 5 years from now, I'm thinking of like DraftKings and some of these, sports they started in one state. Clearly, they're like, wait a second, this is a great opportunity to bring in tax revenue. Is the same kind of thing, proliferation, going to happen with this? Do you think it'll be across 50 states in 10 years?
Yeah, it already is, because I mean, that's the work I did first. And again, I'll compare it to a band. I love this analogy that I came up with. So when I worked at a record company, I worked at, this record company when I was really young, 22 years old. And there were two ways to kind of deal with the band. You could take a band and throw the kitchen sink at it. And back then it was like MTV and radio and blow your brains out and do this huge campaign. But you know what? Maybe it didn't work. So there was this other thing we used to do, which was really called micro marketing. And we take a look at what states had a little bit of activity. And then we would go into those states, call it 5. And if we did it right, those 5 states could create enough momentum. And, the way I think about how I started this, and again, this is why finance guys don't think like this. They don't have this experience. The bands that would go kind of state to state to state and play clubs and keep going back were the ones that really created this foundation that they could always sell to throughout their career. And it wasn't about like disposable radio or video. And when I looked at like the state capitals, I thought, oh, I'm on tour. I'm going to the capitals, and my bond is my record. And, there's these funny, like, comparative analogies that you can use. And if I find success, because I've already laid the groundwork, there's no one else that I know that has gone to as many states as I have and met with as many kind of governing politicians in those states. And it's not through legislation. It's through, how can we, let software I was telling you about, we'll give it away for free. The education, give it away for free, because it's good for the business. I don't, need to make money on everything we do. And just answering questions. And I've gone to like a lot of conferences lately just to speak in plain English. And I think that's the other disconnect. These poor people, at this government level, you have crypto guys coming in, and it's always the same. It's transparent, and whatever, secondary markets, real world
verbiage,
and they're throwing all this verbiage at them, and these guys are going, what the fuck are you talking about? And why don't we start with what it is? Forget about the mining, and let's just talk about what it is. And that's been my education throughout this process. But my goal is really, as I announced several of the states that are coming, with this use case we created, then hopefully the other states that we've visited will start to really understand. And the case is they are, because they're already reaching out. And, it was one of the other music analogy I love is there was this country music producer named Tony Brown, and he was a really famous Nashville producer. And he always used to say that the hit happens in the studio. Doesn't matter what you do once you get out. If the hit's there, it'll take on a life of its own. And I think, with this, it's just, there's a market that wasn't opened up, and it's big enough that it'll create some sort of hit. That's the way I feel about it.
What are your thoughts on the evolution of Michael Saylor's marketing and his pitch? Like, in a sense of you see him roll out 4 IPOs, 5 IPOs, and then now his focus is on stretch. It's a money market account. You're looking at 9.5, 10%. And he's still having to evolve his pitch to say, hey, here's the basis of Bitcoin backed credit. Here's the why you should care, because it's a great return. And Fong Lee was on, I think, this week or last week, talking about we're building a cash reserve, which is a huge announcement this week, just to make traditional finance folks feel really good that they're going to keep paying those dividends in the long term, no matter what happens to Bitcoin price. But it's been an evolving process, which is kind of similar to, I would imagine, some of your conversations talking to some of these municipal entities.
Well, it's a little different. I mean, here's the other thing I wasn't really going to talk too much about. Michael Saylor is a force of nature. And I don't, have an opinion one way or another, other than I see what he's doing, with what he's putting out, what he's issuing, what he's putting out there. I see it. My thesis was just a lot more clean, I think. The Bitcoin miners at the time were borrowing at a certain amount, and could you, borrow at something that was less expensive? And the answer is yes. The second part of the thesis, which was really the most important thing I haven't talked about, is the rating agencies. The rating agencies are everything, and no one has gone to them. And that's a process I started 7 months ago. And, I think one of the things that's going to be really important when we talk about, well, what are the safe, financial instruments that institutions can sink their teeth into? Well, use the mechanisms that are in place that create that safety. And that's a big part of my thesis. So I'm not really looking at anything other than what I'm doing. So it's really hard to, I don't like to armchair quarterback either. Michael Saylor is a really colorful guy, and he's obviously very committed. And, that's great. It's great for the business, so in terms of comparatively speaking, I'm just looking to create something that a different, class of institutional investor can purchase. It's that simple for me.
Do you think there's not to just keep harping on MSTR here, but do you think they potentially, if they, I mean, the stock's down 50% basically in the past couple months, right?
It liquidates to 65, doesn't it?
Don't know the exact number. I should. But yeah, I know that as it cascades down, eventually they're going to have to sell Bitcoin, which they said for the first time ever, which kind of, as a shareholder, takes away from the thesis. I've not sold a share yet, so I've been riding that whole ride down. And I think long term, 10 years from now, I'll look back and be happy, hopefully. But
look, I mean, the media has this way, of creating hysteria, and then, hey, it's a bull market, everyone's getting rich. Hey, it's a bear market, we're all losing our money. And I'm kind of more. You're right. I am pale, guys. Jesus, just looking at myself.
I was saying I was.
Yeah, no, I'm pale.
Nobody's got this tan going on.
Good lamps.
So I think of it different. I was reading that from 1971 to 1980, gold had these, dips, sell-offs, when it was unpegged. Nixon unpegged it from gold. So, I mean, from the dollar. And that happened 7 times, over that time period. Bitcoin has dipped, I think, below 20%, 20 times. And if we get caught up in that volatility, I mean, the whole point is it is volatile. And one of the things that, we ended up doing with the bond was to deal with the volatility was over collateralization. And that's the real underlying structure to deal with that volatility. But, my point is, I personally don't get it. Again, not being a finance guy, I love the finance guys that have all the answers, why it happened. Well, the market makers blew up and now they're not market making. And, you hear all that shit. And okay, it's a volatile asset. It's going to bounce around. And, who knows, by next week, it could be at 120 again.
Yeah.
And I just try not to listen to too much of the noise. I either believe in it or I don't. And we have so much adoption right now with, ETFs and, just I think Vanguard just came online yesterday. So I just think if we look at it from that macro kind of level, it's like there is adoption because these institutionals are doing it. So why don't we just go with that?
Mhm.
Because it's going to be hard to stop it at a certain point, just because it is a true global asset.
Yeah. Just for the listeners, I think it is. We've had some people talk, very bearish cases for strategy and getting liquidated. But I think if you look at like basic assets and liabilities, if they have 55 billion in Bitcoin roughly, and then they have the preferred equities are 600 million per year, and liabilities that they need to pay out in these dividends, they're promising these returns. It's a really good ratio. And they can also pause those like within, I think there's like Stride or Strife is like one where, the dividend is cumulative. And so you're going to have that recurring liability, but they have plenty of capital to be able to cover that. And so the only situation is they still have a few convertible bonds out that they need to like make sure they retire, but they have already shifted to move away from that model. So there's I'd say 1,000 more companies that are maybe less well capitalized than strategy is. And so I agree with what you're saying of there's a lot of fear mongering, but you at least would have to look at Bitcoin staying at like 16 or 20 or 26 for 3 years for a long time for them to really have issues covering that the liabilities they have either with the preferreds or the convertible bonds. And then you have I think if you thought about a 3-year bear market where it's that low, it just doesn't seem feasible if now you have Bitcoin ETFs as like BlackRock's top product. Right. So like there's, I think now too many people with hands in the cookie jar that would not want to see that and have some influence on how the market's going.
And keep in mind, if I'm the first guy to really open up the debt market, that's bigger than the entirety of the equities market by 3? Yeah. And so we haven't really seen institutional adoption in my mind. And, once we do, I mean, this is a product that has a limited amount, what's going to theoretically happen? I mean, I really try to break things down simple. I'm not that smart, when it comes to, the math behind it. My partner is kind of geared for that. And that's why our business really works well. I'll come up with some crazy, batshit crazy idea and, then we'll make
like me and Jody. I'm like, funnel me in.
Yeah. And, then we'll make it foundational to the business. But I mean, if I break it down really, really simply, it's like, what's the addressable market? How much, supply is there and what's the demand for it? And are these interesting products that are going to achieve something? And the truth is, when we think about digital assets, because of the nature and the complexity and the way they, can generate yield, the eventuality of, creating these innovative financial instruments will generate more returns for folks. And that's the exciting part to me, is that innovation when we take Bitcoin and pair it with, some sort of real estate product or, just what FHFA is talking about, and I think that's why it's not going anywhere, because you've got government adoption. How many, governments do you have, doing digital reserves right now? And that's what is going to change everything. Because if these assets appreciate, I mean, for me, like the bonds, like the brass ring with the bonds is if a state issues their own bonds, it's tax exempt. They, take that, issuance and cover their underfunded pensions, which I think there's about 33 states with underfunded pensions. Well, that solves the solution. Or if a university issues, look, a lot of universities hold a lot of Bitcoin. If they take that underlying collateral and they issue debt, and sure, the university can issue debt based on the university, but this can be a credit enhancement. A lot of universities were downgraded. So if we take that enhancement, issue debt, and cover the budgets that were slashed, at the university level, I mean, that's what I'm talking about. And that's going to happen with people way smarter than me that know how to create these instruments. And that's what I'm hoping happens, because then the underlying space itself, will sustain. And I'm not saying debt's going to sustain it. We've been through a lot of hard times. The bankruptcies taught me a lot. You never thought Prime Trust would be in trouble, right? or some of those companies. FTX, I always thought would be in trouble because they had board shorts and said, "I'll be your banker" on a billboard. I was going, "Fuck."
Yeah.
Don't know about that. But those other companies were very serious, and so I just think we're past that. If we've made it through, since 2013, 2009, whatever, then I think we're getting on more stable footing now.
Is Bitcoin bipartisan at this point, do you think?
Yeah, I do. I've talked to both sides. I mean, I do think that, the right inherently understands it better. So it's bipartisan, but not completely. Look at our media. How often is, CNBC or CNN or, some of the more left-leaning, outlets talking about crypto? I don't see a lot. Meanwhile, you look on the right, and they're all talking about it. So it's not all the way there yet, but I think we're moving in that direction.
Yeah, I mean, it should be. I'm just curious too, with if Trump doesn't, if JD Vance or whoever they put up doesn't win, goes back to the left. I agree with you. I think at the point, too much money's involved. There's too many voters, and it was the biggest.
Institutionals. So when you have BlackRock, look, I mean, the one thing that's not bipartisan is institutional money.
Right.
And, the more institutional adoption we see, and then that again is, when you look at the banks doing debt, they're massive. And there becomes a moment where you can't really stop it because it's already just so widespread at that point. And again, going back to what I said earlier, if you can create a market of derivatives, that market can be bigger than the underlying spot market of these assets. I mean, let's think about this. What's Bitcoin, 3 trillion? Or crypto as a whole? What's the whole crypto market right now? I don't even know. I'm guessing 3 trillion.
Yeah, Bitcoin's like 2.3.
Right. So
3.23 trillion as of the second.
Okay. So like that is a fraction. I mean, it's not even a fraction. It's a fucking rounding error, compared to what just the debt market is. And, so when we start creating those derivative products, that may not require over collateralization by Bitcoin, or there's ways to find leverage on them, again, smarter people than me, then I think you're going to see a really robust underlying business. Industry. It's not a business.
So you teased a few states coming out. You're working on a few things, like bringing the vision together. What's the best way to follow it? What should we be looking out for, the next couple months?
Well, I think it's going to be the next couple of weeks. And, we're going to see announcements going all the way through the middle of January. And again, this is the fun part, it's giving birth to something and having it lined up. And, the nice thing about the states and the way I kind of worked with them is it also created this natural moat. It also created a lot of confusion. The municipal, that we did, and it is a true municipal, it has a CUSIP in New Hampshire. The really cool thing about it is people are like, what the fuck is this? And I kind of like that disruption. And, I've gone to a lot of these bond conferences, and literally, I can't tell you, 80% of the people I meet are like, you're fucking crazy. And even some of the partners I have today rejected me in the beginning. And I just keep thinking, yeah, the Beatles got rejected too, just about every single label. But, it's funny because like some of those partners that rejected me and some of those law firms that rejected me when I kind of came up with this now are my partners, because it just took a minute. And I think the biggest problem I have is you finance guys, man, and I'll lump you in that category. You guys speak a different language, and I use the wrong vocabulary, and I know what I want to do. It's just sometimes, when you're talking to finance folks, it's hard to be on their page if you're not using the right vocabulary. So
yeah, well, I think to bring on the next 100 million people, we need to start speaking in normal verbiage versus, even finance at one point. I was looking at the history, like they used certain words to keep people out, initially. And I think, I don't know if that was the intention here with Bitcoin or with crypto, but it does. It confuses people and people don't understand it. And the natural move is to push it away. And if you don't get it, you don't want to talk about it because you don't want to sound stupid, right?
That's the funny thing about politics. It's the folks in politics that don't understand that will attack it. And, that's always like the reflex. And, and I think you're right. I think you're 1,000% right that it's overcomplicated by design. So there's a need for those advisors. So there's a need for someone that understands it when you don't. And that's where we get into trouble as a country, really. If we take a look at subprime imploding, well, Bitcoin was the answer to that, right? It was, we don't trust central authorities, let's get rid of them. Let's do this peer-to-peer. Let's get rid of the fucking fees. Let's be in control of our own money. I mean, that's what the theory was, right? And I think, that to a certain extent, it can happen at a wider scale, and we can change monetary policy by being clever about how we use these assets and how we integrate them. And it really is about, all of this is about communication. How do you get traditional finance institutions to talk to people that do digital currency where they're not talking at each other, but they're collaborating? And in the spirit of collaboration, that's when you're gonna come up with these incredible ideas. Again, I want to ask Jeff Bezos, oh, really? Out of 40 ideas, you go to the 2 great ones? Well, how the fuck do you figure out what the 2 great ones are?
True.
Yeah.
I sure don't know, which ones are going to be great. I just know I want to do them all. So, I'm going to try to do as many as I can, where my instincts take me, because, I don't know that I know what the great ones are. It's really, really hard sometimes. But with this bond, I will say, I never had a doubt, so maybe that's it. When I first started thinking about reimagining what a digital reserve is, and it really, it came from what the states had. I knew what the states were holding, from unclaimed property to forfeitures. And coming from the bankruptcy side of things, where you're rebalancing assets, it was really like an easy concept to say, let's rebalance those and put them in a remote trust vehicle and issue debt instruments on top of it. You're not liquidating the assets. You have the best assets that are going to appreciate, and you're now issuing debt so you can take care of problems at home. That was just such a simple concept to me.
No, it's interesting. I was calling you like the Alexander Hamilton of of muni bonds. You're grinding. You're going to state by state. So we're gonna have to bring you back because I think your name will become more and more apparent and in the news. as the weeks go by. Now it sounds like I was thinking this is gonna take a few years, but it sounds like we'll have
another state announcement coming in the middle of December, and then the big announcement. The thing I've really been working on hard, and it's the thing that's going to define all of this, and that's the one, that'll be January. But that's the one that's going to change everything. And I love New Hampshire, and again, I think it's such a weird thing to try to cobble something together so people can see it, and that's really what this was also about. Being the first one to do a municipal Bitcoin collateralized. There's a lot going on there, but at a certain point, Texas will look at what they're holding. California will look at what they're holding and say, shit, why don't we use these assets in a really positive way? Because there's a whole bunch of problems we could solve for: law enforcement shortages, homelessness. These assets are just sitting there. And that's the real travesty. Like, if you're sitting on these assets, well, fuck, let's see which ones, have airdrops and forks, or what we can liquidate and put into, there's so much we could do with all of the assets that are out there.
Yeah. No, it's fascinating. We'll have to bring you back. I know you're an advisor for Ripple too. We didn't touch on. I know you were a manager.
Don't ask me to do anything. I became an advisor in 2013. I think Brad's asked me to do one thing in all those years.
Okay. You got it on your LinkedIn, but I saw you from Jason Mraz managing him to Muni bonds. You kind of hit everything in between. So it's really nice to talk to someone that is more of a normie coming into the space, right? And can talk to the other normies that are out there and the politicians that are normies as well. So anything we missed here that you'd want to touch on? Anything? One question I had, and I don't know if you can answer, is who do you think the last state would be to take this on?
Last state?
I live in New York. I'm thinking it's going to be New York, but
no, New York's great. So I just did a conference with the deputy mayor of New York where he asked a lot of questions about this. It was called Pension Bridge. After Eric Adams announced the Bitcoin bonds, I met with him a couple of times, And there's a lot going on in New York. We actually do a lot with New York. So New York's early. I mean, look at the BitBond stuff. I'm not the BitBond stuff, the Bit licenses.
Fair.
It's definitely not going to be New York as a last kind of hope. For this, I would say Nebraska because they're a no debt state. They don't believe in debt, but no, they're really open to this too. It's kind of hard to put my finger on who would just like outright reject it, and even California is finally coming around. I would have said California.
Yeah,
it was going to be the last one, but even they're coming around now. So I don't know, to be honest with you.
Fair enough. Well, Les, thank you so much for coming on again. We'd love to bring you back in a few months after we have 10 states under our belts. But thanks for coming on and kicking off the first ever Midweek's Markets. So for those listening, every week on Wednesday, we'll be doing that. Tune in on Friday. We do our Bitcoin, the Friday stack. So we actually give away Bitcoin, Les. So we're doing our part as well. It's a little fun game, trivia to excite people. So make sure to tune in on Friday and follow us. And Les, where can people follow you or Wave? I think we tagged them in this post.
I think we just have like a LinkedIn, and I'm on that X thing, and I'm old. I'm on the Facebook thing, and I don't think I have an Instagram anymore. I'm too old to do that. So yeah, I mean, anywhere, I'm out there.
Love it. Well, stay humble, stack sats, and thanks again for coming on.
Knew I would love you like a fat kid love food. Knew I would score like Shaq did in school. Knew I was stupid, knew I looked like a big fool. I must have had the flu, I thought that was cool. Knew you would fall in love with me, and I do, but never knew you